Hello, everyone, and welcome to another edition of the Forex Technical Market Update. I hope you enjoyed the weekend. I really enjoyed mine, and I am looking forward to another wonderful week of what the Forex market has in store for us. Over the weekend, I did something very interesting. I Someone gave me some honeycomb. You know, honeycomb is where the bees the bees that's where you get the honey from the bees, and someone cut off a piece that has a beehive and gave me to eat, and it tastes absolutely amazing. And I encourage I encourage anyone who wants to taste something like real raw honey to get their hands on some honeycomb. What does that have to do with trading? Nothing. It has nothing to do with trading, but it was the first I've ever done something like that and tasted it, and it was just out of this world. Very sweet though, so you only can eat a small amount. Okay, so let's take a look at the chart in front of us. We have a chart of the euro, and the market rallied slightly into the Sunday session, uh, declined down to 113.20, and is currently declining as I speak. But overall, we're in a doji pattern for the euro. And as I've been saying over the last couple of days, this euro could go anywhere. It's really in no man's land, and but the levels to check are this 115 area, this 115.38 area. This is the high, 115.38. And if the market is able to break below this trend line here, you could see a further move down in the euro. So this overall triangular pattern is really the confines that the euro finds itself in, and a break below these confines will or above will determine the euro's future over the next couple of months, really. And this is the triangle on a weekly time frame. I mean, normally the rule is that when you are in such a strong downtrend, the market pauses, triangle, and then continues down. That is the rule, because what we find, triangles normally act as continuation patterns. So 8 in 10 times you will normally see the market head back down. But remember, and always keep in mind that the market can go back up. Okay, that's what's happening in the euro. The British pound are still playing out this head and shoulders top. The market is slightly down on the day, but is bouncing off of previous resistance that turned support. Because if we draw our line here, actually, let me get a horizontal line. Horizontal line there. This area there, this 158 level was previous resistance. The market came down, went up, pierced through the resistance, came down and tested this resistance, and is bouncing slightly. And if we take a look at it on the 50, actually let's take a look on 60-minute time frame. This is the support line, and the market has bounced. Notice also that this line also coincided with this S2 pivot point. So if you are a day trader, this will definitely have been a good entry point, because you have what we consider confluence of indicators. And for anyone who has taken the course or attended any of the webinars, you know I'm big on a confluence of indicators. A confluence of indicators just means that when you have multiple pieces of evidence to tell you that a trade will work out. So you could have pivot points, a support and resistance area, a Fibonacci retracement. When all these elements align and you get a buy signal, that could be a high probability setup. That doesn't mean the trade will work 100% of the time. It just means that's a high probability setup, and that would be a good point for your trade entry. Okay, with the British pound, we are going to see if this low will hold near this 158 level, and if it does hold, the next area of resistance will be up at the previous high that was made last week of 159.30. 159.30 is our new area of resistance. Okay, so taking a look at the British pound versus the Japanese yen, the rally continues. We have not made a new high today. Last week Friday and Thursday, the market had some inside days, and now the markets are attempting to rally. A close above this 196 level will definitely be positive for the bulls, while a close below the low of this doji candle into the 194 area could be the first signs of a correction or a reversal in this market. But as usual, we let the market decide what it's doing and then we react. Taking a look at our Japanese yen, we see that the market is finding support near the 122.46 level, and this level, if we do our Fibonacci tool, this level is exactly the 50% retracement level from the swing low that was made near 118.92 up to the swing high of 125. That's why this area is acting as some support area. Okay, taking a look at our gold, and gold is a market that has just been up one day, down one day, and because the consolidation range is so tight, I suspect the breakout of this market will be fairly strong. If this market does break out of these ranges, we could get a pretty strong move in either direction. So gold, what's happening now? The bulls and bears are battling it out in gold, and I suspect that once we come out of this consolidation, we could be in for a pretty strong move in gold. If gold takes out this 1300 level and rallies, that could be the start of another multi-month rally in gold. If we get below this 1150 area and close below, that could be the start of a couple of hundred points to the downside on gold. Okay, taking a look at, for you stock market folks, taking a look at the S&P 500. Actually, let me look at the equities themselves. S&P 500, we see that we're coming up on a rounded top situation here. This market is moving. It's not a perfect triangle. It's not a perfect triangle here. It's kind of a rounded top, and that could be the sign that this market is topping out and is struggling to rally, but it's not declining. And what I suspect is that if we do get a new closing high, that could, in the S&P 500, that would be above this 2140 level, we could see another couple of points on the S&P 500. But I suspect that this move is largely over with regards to stocks, and a correction is due any time now. So it's good to be defensive when it comes to the stock market. That's not to say you should go out and short the stock market, because that will be going against this long established trend. But if you have stocks, it's definitely worth being cautious. That's all I have to say. Okay, taking a look back to our favorite currency markets. We're at the Australian dollar, and we're still playing out this triangle in the downtrend here. This is the established downtrending line, and this is our support area here. And really, the Australian dollar, and I suspect gold will follow, or the Australian dollar is looking to gold to see what direction to take, because the Australian dollar is loosely correlated to gold, and if we see a turnaround in gold, we could see a positive turnaround in Australian dollar. But if gold begins to break down, the market could close below this all important 76 level, and we would have to watch out below, because that could be a definitely a couple pips to the downside, from 77 down to maybe the 70 level, if we do break out of this triangle here in the Australian dollar. But things coming up, and the thing to watch for this week is definitely the British pound. It has been performing well over the last couple of weeks, and our signals have taken advantage of the fact that the British pound is rallying pretty strongly. So that's definitely what we will be focusing on this week. And remember, if you want to take advantage of these signals to be automatically copied into your account, our members are loving the service. I'm getting a lot of emails of the ease of how to get started and seeing the trades in your account. You can click on the link below to get started as soon as possible. This is Beyond. I hope you have a wonderful week. Thank you very much for listening.